Yeah, so it'll take a few minutes and then it'll start. Yes, so I think we can start. So as you can see, markets, for example, commodities markets, they are up a little bit. Copper was actually up nearly 1%. Should have basically hold that. It's probably one of the worst decisions I took this month, with not holding copper, as it has been rallying ever since. Other than that, Forex is there has not been that many changes. There has been some news, for example, from Britain that should be very bullish for the Great British Pound, but we have not seen that rally yet, even though the Great British Pound rallied significantly early in the week and has basically been depreciating ever since. Then we have the futures market, and they are up a little bit. For example, we have the Dow Jones here up at 0.15%, and then we have the S&P 500 also up nearly 0.20%, and the NASDAQ shouldn't be that far behind. Otherwise, the major news is that Biden is proposing a tax plan, basically for his infrastructure bill. He is going to plan to basically tax corporate America, and also in order to pay for that plan. And yes, that is not going very well with corporate America, to be very honest. Otherwise, the big movement in the market today is basically the cryptocurrency market. And if you look at the cryptocurrency market here over at the investing, as you can see, Bitcoin, the top of the range, it is basically down 18.8% in the last 7 days. I think it was, or 20%, but it's 18.84%. And that's quite a big drop. And as I've been pointing out for the last few days, there has, in the long run, there is most likely going to be a change in the trend in Bitcoin. It has been rallying since November, and now it looks like that the weekly chart, at least, you can see that the crossing of the MACD in the weekly chart, and that usually takes quite a long time in order for that to change direction again. So we could see probably several weeks where we have a decline in Bitcoin and where it will drop. And it is kind of about time. It's trading at the 49K at this current stage. Other cryptocurrencies, for example, Ethereum is doing much better than Bitcoin is doing. And Ripple or XRP has basically lost a third of its value the last 7 days. And then we have Dogecoin, which also is down today, or last of 24 hours, roughly at 10.6%. So you just go all the way down the list. I have a little bit of cold today, so bear with me. If you go all way down the list of roughly the 2,000, 5,000 cryptocurrencies that are available here, most of them are in basically red and are retracement. And this should basically be a massive warning for this market, because 5,000 cryptocurrencies, that is quite a lot, to be very honest. So we'll start by looking at calendar, and there was some really good data out of Europe earlier today. You can see we have 3 stars here. This is basically retail sales in United Kingdom, and they were basically fantastic in March. So forecast was basically 1.5, and the actual result was 5.4. So nearly 4 times as high as expected, and that is absolutely amazing. And this should be really bullish. And a better than expected value is bullish for the Great British Pound. Then we also have the PMI from, no, we don't have the PMI, we have it here. So your PMI from Germany, and also that is better than expected. And also this should be bullish for the euro. So we have seen the Great British Pound and also the euro rally a bit today. We can see it over here in the foreign exchange. So the euro is up 0.33 against the US dollar, and we also have the Great British Pound up roughly the same against the US dollar. But there is also US dollar data coming out. For example, new home sales is coming out later on, and of course that can also be bullish for the US dollar. So don't expect massive movements in the foreign exchange market today, but we could see some movement, for example, in the oil market, as the rig count is basically due to at basically 1 p.m. it should be. Yes, then we can look at the yields, as they were really important for only weeks ago. Things changed really rapidly. But the 10-year yield has basically been rallying since, this is back in September or August last year, and basically reached a high here at 1.7755. So since then we have basically fallen a bit, and if you look at, for example, the Fibonacci retracements here, we haven't even gotten close to the first Fibonacci retracement at 1.47. You have the next one here at 0.38 or 38.2, and it's all the way down to 1.28. And then we have the 50% Fibonacci retracement is down here at 1.148. So we can also look at the MACD and stochastic for the US 10-year. And as you can see, the MACD is basically in negative territory, way below the signal line. So if we're going to have movement here to the upside, it'll probably take a few days. It will probably hit the first Fibonacci retracement before we see a movement towards the middle of the Bollinger Band. We can see also the stochastic is underneath. It's basically in bearish territory, and also it's about to cross the signal line. We have occasionally seen these rallies in the stochastic, basically seen these moves towards the middle of the Bollinger Band, but as you can see, they have basically been sold into. So rallies up towards the 20 have basically been sold into, and that is probably what we're going to see going forward until we probably get down towards 1.28. And if that is the case, then this should be really bullish, for example, for stocks and indices, as borrowing costs become basically cheaper. So let's look at the US dollar and indice, and here it has basically taken a massive U-turn. It looked like we were going to rally significantly back towards give or take 95. But we got towards 93.5, and then it basically just broke down. At this current stage, we are trading at roughly 91.025, and well, MACD is bearish, way below 0, and we're also way below the signal line. The same goes for the stochastic. It is very bearish and also in bearish territory. So if this continues to fall, then we could see, for example, oil prices increase as it becomes cheaper to buy oil and also other commodities that basically are priced in with the US dollar. So as the US dollar depreciates or becomes cheaper, then it also becomes cheaper to buy these products that are priced in with the US dollar, and therefore demand should go up and prices should go up. So the more further this falls, well, the higher precious metals commodities should go as well. So let's look at we'll go to TC2000. So my idea was basically to look at the indices and to find different patterns in indices and also the foreign exchange market if we have time for that. So as you can see this is the S&P 500. We did fall yesterday. This is the pair market and not the futures market. So it is up 2% today. So it's up a little bit from the very lows yesterday, and we need to go to the daily in order to see this proper. But this has basically been bouncing off the 50. It has been bouncing off the 20 exponential, and occasionally it has basically broken down towards the 100 moving average. But we have never really tested the 100 moving average. You have to go all the way back towards November last year, when we basically broke below the 100 moving average and also tested it here. But in recent months, we haven't gotten close to the 100 moving average. So the 20, we can put it here. This has been supportive, this has been supportive, and this has been supportive. So if we were to fall from here, then probably 3,970 is as far as we will go. If we drop below that, then we have the 100 moving average, which has offered significant support in the past. So there are signs that we may head lower. There are signs of that. It's not due to the yield or probably the US dollar. It's probably due to, for example, policy. So fiscal policy is something that is going to be probably very bearish for this market going forward. And the question is whether or not monetary policy may keep this market up. So with quantitative easing, it may be bullish for this market, but if you start discussing taxing corporations and the richest people in the United States, that will not be seen as a bullish sign for this market, and some kind of bad news from those policies can basically trigger this to basically fall. So it will be choppy, and we'll most likely see a fall before going higher. But we are in uptrend, and there's no question about that. We are in this channel here and have been for a really long time. And as long as that is the case, it is basically buying on the dips. So buy it as cheap as possible. That has been working, and the shorting these indices is absolutely technically crazy, to be very honest. So if you look at the cloud, for example, we can see that we are significantly above the clouds. We are actually in an area where we are fairly overstretched, and we have been overstretched for quite a period. Give me one sec. Sorry about that. So we are getting fairly close, and we have been really close to the top of the Bollinger Band. And if you look at the historical patterns, every time we get in close, it has basically been rounding up and heading back towards the very lows. Sometimes underneath the Bollinger Band, which is this blue line here, you can see it here, and the same here. It's basically been just bouncing off. So we could see a similar pattern here, that we had gotten really overstretched, and now we're just going to round off towards the bottom of the Bollinger Band, and that probably would be around 4,000. So that's why I'm quite skeptical of the market at the moment. I think that we're going to see a pullback towards the 4,000 before we go towards 4,500. That's the long-term target here, or the 5,000 level. And we are above the cloud, and that is a bullish sign. We have the crossing of the 9 moving average and the 26 moving average down here. This was back in 15th of March. As long as that is the case, we are in an uptrend, but we will see additional pullbacks in this uptrend. So if you look at the 4-hour chart, we can see that we are finding in the 30-minute chart, we are finding support here at the 200 moving average. So 200 moving average is basically holding. We can see here in the 1-hour chart, that is the 100 moving average that is holding. And we can see here in the 2-hour chart is the 50 moving average that is holding. And here over at the 4-hour chart, it is basically the 20 exponential that is holding. So we're bouncing off the 20 exponential and have been doing that for several times now. And if we were to break below the 20 exponential, we could head first of all towards the green line, which is the 40 exponential down here. That is at 4,089. Then we have the 50 down here at 4,050. And then we have the level here, which is 100 moving average in the 4-hour chart. And that is just at the 4,000 level. So give or take 3,971. So all of these have to basically break in order to get towards this level here. So it's often a good idea to look at the lower time frames. And as you can see, we have been bouncing off the 100 moving average. We have it right here. We have it not right there. We have it here, and also way in the past. If that basically breaks, then the 200 moving average is the next target, and that is all the way down. You can see it tested here, here, and also nearly there. But the 200 moving average is quite far away. I would be fairly surprised if we fell to 3,870 before rallying. So that will basically be a massive drop from where we are at the moment all the way down to the 200. That's 6.5% to the downside. So it's possible. We have seen 12% drops. This was give or take nearly 6.5% drop. And this was from the top to the very lows, 10.4%. And this was a drop of almost the same of 8.21%. So we're still in an uptrend, fairly overstretched. Pullback is kind of expected. If that doesn't occur and we take out these previous highs, then we could go all the way up towards 4,500. So let's look at, for example, the NASDAQ. Sorry, it's wrong. So the NASDAQ has not been as bullish as, for example, the S&P 500 and also the Dow Jones in recent weeks. And there's far more bearishness in this market than there is, for example, in the S&P 500 and the Dow Jones, and probably also the European indices. If you look at the MACD, it is also all about to cross the signal line. It's still in bullish territory, but it's not a good sign for the MACD. RSI is bearish, and the CCI is still above 0, but it is becoming bearish, and stochastic is very bearish indeed. So if we were to break the 20 exponential, we are basically between the middle of the the Bollinger Band and the top of the Bollinger Band, and we're basically in no man's land. So not a ideal place to trade, but if we were to break the middle, we could head towards the very bottom, and that is basically testing these very lows again. So that is, give or take, a drop of 7.2%. That is too low in my estimate. Probably towards 100 moving average is where we'll basically turn around if we were to have a certain drop like that. And the reason why I say that is, of course, we have the 100 moving average here, which usually has massive support. And also that is an area in this, around this area here, which has been previous resistance support. So this was previous resistance, and then it should be support now. So when we tested this a long time ago, that should be a massive support at this current stage. So if we look at the cloud for the NASDAQ, we can see that we had a crossing of the 9 moving average and the 26 moving average down here. That was basically in the end of March. This is where things turn around and we headed to the upside. We basically have a head and shoulders pattern here that will come basically show in a moment. But that was basically a signal that we were going to go higher. We did buy into it, I think I was around here, and got out of it around this area here fairly early due to the fact that we were getting very overstretched here, and I was thinking that it was basically going to drop back towards support before going higher. But it didn't, it just continued going higher, and well, that's the name of this game. You can be right, but I'd rather be on the safe side and sell in this area here instead of basically seeing this pull back significantly and lost all the gains that I had received. But if we were to hold, then this would have been a much better trade. I think we entered here. That was basically a rally of 7.2%. I think we got around 2.5 or something like that. So it's not really good. But we are about the cloud, and if we were to break down from here, then of course this area, which I pointed out earlier, should be major support, as this was significant resistance in the past. So we could see this drop back towards this support level before going higher. That is possible, but otherwise it is bullish in the cloud. We have a crossing here, and we are above the signal line, which means that we are technically in an uptrend. So if you look at the 4 different charts, we can see that in the 30-minute chart, sorry, the 200-moving average is acting as support. We're just staying right here at the 200-moving average. In the 1-hour chart, the 100-moving average is, give or take, we have basically crossed it, and it is acting as resistant at this current stage. We can look at the 2-hour chart. That is the 100-moving average, or the 40 exponential moving average, that is acting as resistant. We're trading right underneath that. And in the 4-hour chart, we are just above the 40 exponential moving average and just underneath the 20 exponential moving average. So we could see support here at 13,642, and then we have the 50 moving average down here at 13,450, give or take, and then we have the 200 moving average down here. And that is probably as far as this will go. As you can see, when we get to the 100 moving average, we are starting to test these previous resistance levels, which should act as support if we were to break down towards those levels. So if you look at the price action for the NASDAQ, we can look at basically this pattern here, which is a head and shoulder pattern inverted, and that is a bullish pattern. So we have our left shoulder here, and we have our head right here, and then we have our right shoulder here as well, and then we have right shoulder here. So this is basically the neckline. So around this area here is basically where we have our breakout, and we can see that we basically gapped up, and since then we have basically been rallying it. So this is a rally, give or take 6.3%. So from the very bottom here towards the neckline, that is a give or take 7.79%, and usually it basically rallies that high, and we're getting really close to that. We can get it here all the way down there. It's 6.3, and 7.7 was basically what was expected. So a pullback from here could be possible. We need to break this previous highs of this candlestick, and if we were to break below this, then we could head back towards support in this area here. If you look at Fibonacci retracements for this, then they fit really well to where we are at this current stage. Right, so yes. So you can see that the first Fibonacci retracement is right here. That's at 13,619. Then we have the 38.2 is down here at 13,360. And then we have the 50 right here. And that is basically right where we expect major support to be. So there are several things. First of all, this is basically the neckline. This is previous resistant area. And we also have the Fibonacci retracements at this point. So if we were to break down from here, then we'll most likely find major support right here. And this should actually be where this should turn around and head towards the upside. Well, if this doesn't occur, then we could basically see this rally significantly to the upside. So that basically means that we'll break above this, this line at give or take 13,954, and we'll head back towards these, first of all, these previous highs at 14,000, and then after that we'll head towards 14,500 and beyond that. So it is to be seen what happens here. Another scenario is that we will create a bullish flag pattern, which is about to be formed. So it hasn't really started yet, but it could actually be that this is basically a bullish flag. That basically means that we'll go and head north after this. So we could see something similar to that as well. So if we start trending towards this corner, we could basically head towards the high. So that could also be a possibility, but at this current stage, we are positive in the futures market, and we can see it right here. We are up 0.2% if I give or take. So we can go and look at the foreign exchange market. The foreign exchange market. So we have it right here, and we have the British pound and the US dollar. And as you can see, we are rallying a bit, and this is probably something that I'm going to be paying attention to during the day, due to the fact that we did rally significantly here. And after those rallies, you usually have a pullback towards support, and 50 moving average is often a significant support. We can also look at Fibonacci retracements just for this small area here, and we will see that we are approaching right at the 50 right here. And that is also at the 50 moving average, which should offer significant support. Break below here, that will open the door to the 100 moving average and way below that. However, there are warning signs. For example, the stochastic is very bearish at this point, and the CCI is becoming bearish. And there is quite a lot of room towards the middle of the Bollinger Band. So if the middle of the Bollinger Band breaks, then we could head to the very lows. If we rally from here, then we could head towards 1400. So yes, that is to basically be seen. So we also have a triangle pattern here. We can look at it in the 1 hour chart. So you can also go and look at the 4 hour chart to basically see it better. So we have, here, triangle, and we have it right there. So we could, if we basically break out towards the upside in this triangle, then we will go towards these previous highs at this 1.4. Break below here, then we'll go back towards these previous support levels down here. So we can see it in the, over here, where you basically see that we are about to head towards this top, and if you break above this, then we'll go towards 1.4 and probably beyond that. But still, technical indicators are not, they're not agreeing on where we are basically going, as the stochastic is negative, and the MACD is bullish, and the RSI is bullish, and the CCI is flat. It is kind of difficult to basically say whether or not we are going to rally from here. But the Fibonacci retracement, that is right here, and also the 50 moving average. And we are also seeing that we are starting to rallying, and we also have fairly good news. So if we were to basically bet on this, then it will basically be to the upside, but I would have a really tight stop loss right underneath if this basically goes sideways. But this is something I will look at later on today, as I usually never trade when basically the US market has not opened yet. So the Japanese yen, there's nothing really interesting there. We have the euro, for example, very similar here. We're trading, we did break down, and now we're rallying about the 100 moving average, and it is still very difficult to say whether or not this will continue. The problem I have with this is that we are significantly overbought. We are above 70. We're getting really close to the top of the Bollinger Band, and we haven't had a major pullback towards the middle of the Bollinger Band before going higher. So I think that we are going to witness that before we go significantly higher. So we have the Aussie dollar, US dollar, nothing really interesting there, but we do have something interesting here in the Canadian dollar. No, not really. So, any questions? Yes, then we can go and look at the scan. And there should be quite a bit of, we have it right here. So in the big cap, there is around, yes, we have 16 in the S&P 500. So there has been quite a lot of selling occurring the last few days in S&P 500. We have C here, Citigroup, especially the banking stocks have basically been hit fairly hard. And this is at the moment significantly overstretched and also significantly oversold. So we are way underneath the, we are just underneath the 50 moving average, and at this current stage, technical indicators are very bearish for Citigroup, to be fairly honest. And we also have the 20 and the 40 exponential that are about to cross the signal line of, or cross the 50 moving average, and that is also bearish at this current stage. So this probably will drop all the way down towards the 100 moving average before it going higher. So now we have United Airlines holding. So airlines have been absolutely trashed, especially United Airlines after their terrible earnings. So yes, as probably people that were listening to Warren Buffett only basically a year ago when he started selling all of his airline stocks, that it will take a long time for the airline industry to basically recover, and therefore there is little profitability in these basically airlines, because they will have to pay off their enormous debts, and when you have to do that, there's nothing left for example, for investors. But you can see that we hit the 100 moving average down here at 49, and it's actually quite incredible that these airline stocks have recovered as much as they have, because it has been an industry that has been absolutely hammered for the last year, and they have basically just recovered from the very bottom here to the very top. This is an increase of 222%, more than 2x, and with the industry that is basically on its knees, that is fairly impressive, to be very honest. So then we have, now this is not very good. And then we have this is not good either. We are looking at JP Morgan, and JP Morgan is one of the very big banks as well. So at this current stage, we are trading at 147. We are on the edge of being oversold. We are significantly overstretched here in the bullish band, and therefore we could expect a pullback towards the 50-moving average. We have a crossing of the 40 and the 50, and the 20 and the 50 are most likely also going to occur. And if that is the case, then we could see this drop towards the 50-moving average before finding major support. And that is around $140 a share. So then we have here United Rentals, and yes, this is significantly oversold. You can see that that's the 29 in the RSI. Other technical indicators are very bearish, and we are also very overstretched here in the bullish band. So last time we were down here was basically all the way here, and we had a rally of give or take 41%. So yes, if that is to occur again, then we are looking at a rally here of give or take up towards $437. 100. Yes, a very massive rally indeed. Then we have, no, you're not going to look at that. And we have, no. Yes, American Airlines Group. So yet again here, we have another airline that is getting absolutely trashed. And it was mainly due to United Airlines coming up with its earnings, and if their earnings were really bad, then you should expect American Airlines earnings to be significantly bad. And as you can see, we are down. We are at 17 in the RSI, significantly oversold. However, since the bottom here at $8.39, it has actually, when we went to the top, it rallied more than 2x. And for a company that is in deep waters, then this is a fairly impressive move by their stocks. But it has been taking a hammering since the very highs here, and it has fallen roughly 23% since then. It is other technical indicators are very bearish indeed. We are significantly outside here of the bullish band. So 100-moving average should offer significant support. That is at $19. Yes, any questions? So if not, I think that I will kind of end it here. So yes, we'll be back on Monday. So good weekend and good luck.